Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, August 19th, 2010. Well, folks, a monstrous down day on Wall Street, although the markets are slightly off a double bottom low intraday. Before you see the SPY, which mirrors the S&P 500. We're looking at it on a 10-minute time frame candle. All right, so each candle is equal to 10 minutes of the market, and that is what you're seeing before you. Now, the Dow right now is down about 170 points. The Nasdaq is lower by 39, and the S&P 500 is down about 20 and a half. Basically, 1.75% drop on the back of some very ugly economic news. Jobless claims 500,000. What's so big about that, folks? Bottom line is, the last time we were at 500,000, we basically were going back to before March 2009. I mean, we're back to those 500,000 levels where you're seeing these people file for unemployment in record numbers again. And that's not a good thing if this market is going to get out of the doldrums, out of the recession, out of a possible double dip recession. Bottom line is, in my opinion, you're in a double dip recession at this point. Again, no doubt about it. The only reason we ever got out of a double dip recession or out of a recession at all is because of government massive amounts of printing money that they flooded into the economy, and that gave us a short-term bounce. But guess what? That's over. Now it's back to the recession, and you just got to pay the piper. I mean, bottom line is, when something like this happens, you just got to deal with it. I mean, it stinks, yes, absolutely, but it's the cycles of the market. It's the cycles of the world. Everything is in cycles. You have to let it play out. We built this mess literally over the course of 10, 20, 30 years of reckless spending and policies and everything, especially over the last 10 years, and now we have to pay the piper. So, got to deal with it. Let's just suck it up, deal with it, and focus, and we'll get through it in a few years, maybe 3 to 5 years, maybe as much as 10 years based on the constant nonsense that the government continues to do. And by the way, the government's going to keep us in this longer by stupid policies, but that's another absent-minded issue that we can discuss at some point later in a date. Bottom line is, market getting hammered today. Now, one of the big things that I talked about in last night's video to the premium members was a possible M pattern formation. You could see it was starting to come down, and I talked to them. I said, if this came down, this would be a completion of an M pattern, and you'd start to look for the A. It looks like the A started here, now pulled back. We still haven't really made a good enough A, in my opinion, to have an A pattern, but you do have the M pattern in. MAs are extremely bearish patterns. M patterns are extremely bearish. The A pattern usually follows with an upswing and then a further down move. So you have to look at this pattern and say, at some point over the next 3 to 4 trading days, even sooner possibly, you probably will head lower. But first, you're looking for a bounce. All right, what do I mean by that? Well, you're not looking for a big bounce. Basically, an A pattern is smaller than the M. If it goes above the M, it takes it out, and that negates it. So you're looking for an A pattern somewhere in the realm of, my guess would be somewhere up here, or somewhere down here. I mean, somewhere like this. This is a little too small, in my opinion, to be an A pattern, although it's always a possibility. If that was an A pattern, that would be extremely bearish because that would be no bounce at all, essentially, in the markets. All right, so in any case, M pattern formation, that leads me to believe that after a bounce or a move off the lows here, maybe over the next day or so, we will see more downside in this market. Again, Monday, Fridays, tomorrow's options X, that is often a light volume scenario. That could keep the markets up, maybe forming the A Monday as well. Then maybe next week at some point you see another flush. But again, folks, bottom line is, ever since the turn date we nailed, which was August 10th, that was the high on the market, the markets have been crushed and continue to be so. The ultimate target of this market is lower. All right, and that's the bottom line. As long as you don't take out the pivot, turn date high, this market continues to look for the lower move, even though it will have a lot of bounces along the way. And we've seen that. I mean, take a look. A couple days ago, big move up. Even yesterday, intraday, big move up. And then today, down. It just continues to be choppy, but the general trend will be lower. Now, what was the negative news? We obviously know about jobless claims back to 500,000. That's people filing for unemployment. Think about that, folks. For last week, 500,000 initial claims for unemployment. I mean, those numbers are huge. We're not talking about a small number here, folks. That's 2 million a month. Again, 2 million a month. I mean, how many jobs really is the private sector going to be able to add? We know the government's cutting jobs right now because it's census workers. So, I mean, in theory, I got to believe that unless they're fudging the numbers, which is very possible as well, next month you have to start to expect another drop in unemployment. I mean, in total number of employed people, which would mean a rise in unemployment, unless, and this is the caveat, guys, this is why this unemployment number is just absolutely off the chart, ridiculous, stupid, retarded. And again, I don't mean to use that word lightly, but bottom line is this. The unemployment number is factored in for people that are currently looking for work, and that's it. So if you're part-time employed and just making a couple bucks a week because you can't find any full-time, you're not in that number. If you've been looking for a job for 6 months and finally say forget about it, I'm not looking anymore, there's no jobs out there, I'm going to wait 3 months and look for it in 3 months, you're not included in that number. So I mean 9.5% unemployment is really the worst case. That's like the worst number possible to get a good gauge on what the economy is really doing. Yet it's the number that's going to be the best because of those factors. So they're going to push that to the public, push that to the media. The real unemployment rate, if you're looking at all factors included, is 18 to 20% at this point, and it unfortunately may go higher. That's including underemployment and some other factors. In any case, let's go back to the technicals. Enough of me ranting here in this video today. Market continue again to pull back. Sharp sell-off. We got Philly Fed and leading indicators today at 10 o'clock, and that's when you had the big sell-off. This was before 10 o'clock, and this was 10 o'clock. Major drop on Philly Fed and leading indicators after the jobless claims. And again, 3 key data points today that were that bad. Obviously, the markets couldn't hold up. Volume today is pretty solid. We've already done 175 million for an August day. That's good volume. If we were in September, October, November, that would be bad volume, but in August that is actually pretty solid volume. We should do 250 million today, which again for an August day is a very, very solid day of volume. All right, 60-minute chart, folks. Interesting to note this again. If you go back to the 10th, let me show you the 10th here, folks. Here's the 10th. This was our turn date. August 10th. We gave this before it actually happened. Said, guys, the market's going to turn south here. Be ready. This is going to fall. Look at what happened. Here's your 10th. You went down. You had a small bounce. Now you're down again. And you can just see the trend. The bounces are happening, but the trend is now to the downside for the foreseeable future, and we'll continue to update you. And when we have a new turn date back to the upside, of course we'll release that to our premium members at the Research Center and the Intraday Stock Chat. But again, beautiful little movement to the downside, folks, today on a very weak market. Market continues to be very weak, although you are getting a little bounce. Notice again how you fell into the key levels. Here was a key level. You can see tail, bounce. And then if you fell here, bounce. Then you fell down to this bottom level, bounce. Now, why is this bottom level important? Scan out, take a look. The pivot low going back to last Thursday where we had that long tail, and then we went up. Actually, that was this week. Sorry about that. That was actually Monday. Monday, Tuesday, Wednesday, Thursday today. So Monday we had the gap down, and then if we go back to Thursday, which is what I meant originally, that same level. So see how this pivot low matched with this pivot low, and then now this is where we're hovering. If this breaks, by the way, this market's going down very quickly to the 107.15 level. So again, the major support right now is at 107.60. If you take out 107.60 or 107.50-ish and you confirm it, this is going all the way down to this little tail low, and that tail low will be the next support level at 107.15 actually would be that major support. Wild market today, folks. Really wild market. For the most part, you're just looking for scalps intraday. That's really the only thing you want to be doing at this point. Let's take a look quickly at the dollar. The dollar today is up. So the dollar had a beautiful reversal. And again, notice here it started out to the downside and moved up. One thing I wanted to point out here is look at this beautiful pattern. Upward move, sideways consolidation with a necktie underneath. That's bullish consolidation, tells you a dollar may have a move up. And sure enough, the dollar has moved up. Another little nice push right there. Beautiful push, in fact. All right, what else do we have? Gold today. What's gold doing? Gold hit my master level that I gave, and I gave this level to the Research Center, folks. It was in the nightly video basically for every day for the last 2 to 3 weeks, and that level was 121 as major resistance. What did the GLD hit today? 120.99. Right to that point, and then it's pulled back. As I told the traders in the Research Center or in the chat room, that level can be an intraday scalping level. Swing trading gold for a short is always a little risky because you never know what panic is going to be set off somewhere around the world overnight. But look at that short just on an intraday basis. Hitting that 121, shorting it, and you're already in the money 55 cents. I mean, that's just in one day. I mean, these levels that we give in the Research Center are so freaking accurate. It makes me almost insane. And again, it's just great because, again, the money is there to be had. I mean, I'm banking money. People are banking money. We're all banking money. If you're in the Research Center, you should be doing the same as long as you understand the methodology and use it correctly and go by the calls and the levels that we give. All right? Now, taking a look at oil. Oil was a very interesting situation because we had a key little trend line here, and I basically said if it gets below and closes below, oil should continue lower. If it stays above, then oil could continue to hover. As you can see, yesterday we were below but closed right on the line. Today you're below this line. This is a key breakdown line. Assuming you close below here, you'd obviously have a neutral to negative bias on oil, and oil could continue down to this pivot down here. So that's just a little bit of insight into what we're looking at. By the way, markets are getting a very beautiful double bottom bounce. Take a look at this intraday SPY. Let me just zoom in here a little bit. See this nice little pop right here? Look at that thing go, actually. Wow. Nice pop. Look at the double bottom. So this is today's intraday chart. Fell beautifully into that double bottom support right here, which, by the way, if you zoom out, mirrors This pivot low right here from last Thursday, this pivot low from Monday, that's where we hit, we bounce. Well, now you did a double bottom intraday. Let me zoom in again. Intraday double bottom, and look at the bounce and the market ripping higher here. That's cool stuff, guys. That really is cool. All right, enough said. Webinar this Saturday. Unbelievable stuff. We're going to divulge some of our secrets there. Obviously, the Research Center for $49.99 a month. You get everything. And by the way, folks, if you sign up on any day of the month in the Research Center, it starts your month. You're an individual on a month based on your sign-up date. It doesn't go by the months of the calendar month. I know sometimes people get confused by that. I don't know why technically, but it should be pretty obvious. If you're paying for a month, you're going to get your full month, 30 days, 31 days, whatever it may be, and then you don't renew until the following month. So don't worry about that. Continue to make money, join up, learn the methodology, learn how to profit, get the calls and the swing trades, everything included $49.99 a month, or if you want the chat, it's there. I'm going back in live in just a couple minutes in the intraday stock chat, and I'll be giving out calls and analysis all the rest of the day. Take care, folks. Enjoy. Let's make some money.